Hello and welcome to the Spotlight Vancouver podcast. I am your host, Doug Varenas, licensed realtor in Washington and Oregon. And on today's show, we're going to talk a little bit about investing, why you should invest in Vancouver, Washington, and what are some real estate investment strategies that are working today, giving you kind of an overview on your options and what is best. This is going to be very individual, so let's get right into it. So as an investor, what I am primarily looking for in a real estate market is I want to see population growth. I also want to see economic growth and development, and I want to see rental growth. And Vancouver really has all of these in spades, and why I think it's going to continue to perform very well, especially relative to other cities in this area and along the West Coast. And so I think the most important thing to ask yourself if you're looking to invest, is what you're looking to get out of it. What do you want the outcome to be from real estate investing? So there's a lot of people out there that have tons of equity in their homes currently, and maybe that's you, and you're looking to put some of that equity to work because it's just sitting there, it's untapped. Own your home and you have additional savings that you're thinking about putting towards real estate investing. There's a lot of options out there for a real estate investor, and it's easy to get super confused as to what's the best one. What's the best one as far as, which one's going to outperform, which one's going to give you the most return on your investment. But speaking from experience, I must say that the most important question you need to ask is, what are you trying to do? So are you looking to replace your current income, cover all your expenses with monthly cash flow? Are you looking to build equity so you can cash out at retirement age or in 10, 20 years? Are you looking to build up capital in a more quick fashion? What are you trying to do? And that's really where I'd recommend starting, because if you don't know that, there's a million different directions you can get pulled, and it's going to potentially have some negative impact on your financial situation, and it might cause some headaches for you. And I'll give you an example. Like, I used to chase cash flow quite a bit. So I wanted to maximize my monthly amount that I got out of a rental property, which is great, makes sense, right? But I'm going to tell you that a lot of times chasing cash flow is going to lead to a whole bunch of other problems, because when you do that, you're typically looking at lower price properties in areas that just maybe not as good, C minus neighborhoods, maybe even a D class neighborhood where on paper, yes, you're going to make a lot of money every month. Maybe it's $500 a month, which is pretty good for cash flow on a property. Especially nowadays, pretty much impossible to find around here. I mean, not impossible, but very difficult. And so what you get with that situation is you get tons of headaches as far as like your tenants. So you're going to typically, those properties, just given the fact of where they're at and the price point, you're going to attract tenants who might not pay rent. So you're going to have to either, get stiffed on rent, or the tenant does damage to your property that you're going to have to repair. The home in general might be in disrepair, so you're going to have those capital expenses of like roofs and HVAC and everything. And so what you thought was going to cash flow is not cash flowing. And so again, by figuring out where you want to go, you can figure out the best way to get there. So a little overview of Vancouver and why I like it is population growth. And I'm looking at about 1% growth in population per year. It's grown 4.5% since 2020, Vancouver, that is. And Clark County in general, since 2010, has grown just over 24%. So we're seeing a lot of growth here in population, which means people are moving here. And that is really great because that's going to raise the demand for rental properties, which you want to see. So I'm always looking for population growth. Another one is development. We've already seen a lot of waterfront development. If you drive around Vancouver, you see a lot of land. There's just a lot of space, and you're seeing a lot of development there. You're seeing people subdivide larger lots to build single family homes. So you're seeing a lot of new construction in that way. along with that new construction, typically you're going to see a lot of commercial construction. So you've seen that in Ridgefield with the Costco, and you can see commercial builders building shopping complexes, light industrial spaces, small factories. And so you're really seeing a lot of growth in this area. And that is good for an investor because, again, it indicates that people are invested in the community. They see where the puck is headed and they're putting their money where their mouth is, I guess. And so when you see those signs, you know that the rental market is going to be strong and appreciating. So the rental growth this year is about 1.3%. Since COVID, it's gone up about 5.3%, which is over the median national rent increase number of, I think it was like 3.3%. And I don't plan on this level of increase all the time, but I think it's safe to project rental rates continuing to increase. And they just increase because of inflation, but I'm looking for sort of asymmetrical increase. And I think with that, again, that population growth, you're going to see more demand for rentals, which increases the demand in rent and the price that you can command for rent. So overall, I'm super bullish on Vancouver. I have been for quite a while, and I'm seeing that happening with East Side waterfront development, large residential developments in East Vancouver, Camas, Ridgefield, a lot of the Barberton area. You're seeing a lot of new construction. And so overall, I'm just incredibly bullish about the rental market here. So I think it's a great place to be. And given that the sub market has been so strong, I think that it's a great time for investors to jump in, even with the current rate environment. So we're going to go over some strategies to sort out what might be the best for you. What options are there? Because there's just a lot. And there's probably some that I'm not going to mention. This podcast is for the novice investor who's looking to jump in, looking to get some general clarity on sort of what some investment strategies are. My investment journey is continuing to develop and evolve over time. Like I mentioned, I used to chase a lot of cash flow, and now I'm much more interested in appreciation and rental appreciation and just the equity in the home. So just targeting some better environments and paying more for them, because I have that experience where I know that you're going to get what you pay for. And, you can hear all these success stories, and people are successful chasing cash flow and buying in those neighborhoods, those C minus, maybe even a D plus neighborhood, and they do very well. So the thing to remember is, it's also what your skill set is. Are you handy? Are you a contractor? Do you have that kind of experience? Are you good with numbers? Do you want to manage yourself? Do you want to use a property management company? How much do you want to be involved in real estate investing, and in what regard? So some strategies out there that are working. I don't have these ranked, but I'm going to just bring them up. I kind of have a list of them. I'm going to start with short-term rentals. And this has been something I've looked into, and you just hear the stories, the Airbnb, the Vrbo, short-term rentals, you're just raking in the money every month. It's great. It's, it's changed quite a bit. And I think when Airbnb and Vrbo first started, it was a lot easier to just kind of jump in. Expectations were lower. You could kind of do it haphazardly and have it work out for you. And I think that landscape has changed quite a bit because it's just been more competitive. There's more niches. People are just pickier about where they're staying. And not to mention the regulations. So a lot of cities are just clamping down on short-term rentals. There's a lot of sentiment that is anti-short-term rental because it's taking up housing to use as basically a hotel for people that are out of town or they're not really residents. And so there's been kind of an anti-short-term rental backlash recently. And so it's just, I think, a lot harder. And the thing that you're getting into with short-term rentals, because it's nothing about it is passive. And if it is, you're paying for it. So you're basically in the hospitality business if you're doing short-term rentals. So you are taking care of customers who are staying at your place. And so, there's a lot involved with that. There's communication back and forth on whatever platform you're using. You're handling the reviews, you're changing towels, you're cleaning, you're And you can be as active or as passive in that process as you want, but you're going to have to pay for that. So if you're paying for a company to come in and do that turnover with clients, you're looking at 35% of what you're charging is going to that service. It's that high. I've looked into it because I'm like, short-term rental, I fell for it too, or I was interested in it because I wanted to see if I could squeeze more juice. What I found was, at the end of the day, if you're not willing to do it, it's going to really cut into your profit margin. And it is a business that you have to run, and it's not passive. Really none of this is passive. You got to keep your eyes on it. You got to pay attention to what's going on. But short-term rentals to me, are the least passive. And if you throw in that expense of having somebody manage your short-term rental, because they're doing quite a lot, and especially, if they're handling everything, all the booking, all the communication, that's a real hassle. And so if you're not doing it, you're paying quite a bit for somebody to do it. So you're either paying with time or you're paying with money. And so short-term rentals, and for Vancouver, not a super short-term rental destination. Like, I've seen short-term rental prices here, and they're just kind of, there's not a lot of people coming to Vancouver for like a vacation. I love Vancouver, and I think it's great. It's a great place to live. Not sure if it's like high on people's destination list. And so, unless they're into volcanoes or something, they want to see Mount St. Helens, or they want to use it as a base for like getting out and hiking and fishing, I can see certain places, certain cabins, that are maybe in a more rural area that have access to that recreation, or, some lake homes and stuff like on Lake Merwin, or, you have to have a destination. And so if you're in Vancouver proper, just somewhere in Clark County, there's just not a lot of consistent demand, I think. And you know what, if I'm wrong, drop something in the comments, let me know, because I'd like to be proven wrong. And if you have a great story about your short-term rental, hey, let me know about it. Maybe you can be on the show. I'd love to have you on. But in my experience, just what I've seen, the prices are kind of lower. We don't have like a college team here. Some people will come all the way to see the big, college football game, or maybe it's a destination for weddings. And so they'll have, there's just a lot of short-term rentals are themes, and you have to have a certain niche. And I'm not really seeing that as much in Vancouver. So this option would require a lot of effort and potentially a lot of money for somebody to manage. And I don't know if the returns are going to be worth it. You have medium-term rentals. And actually, I am looking into this myself. Medium-term rentals, so that's minimum 30-day stays. You can use platforms like Furnish Finder to post your home. I always recommend professional photos. And that's for people who are looking for quasi-permanent but temporary residence. Maybe it could be for a job, so like traveling nurses or doctors. Could be people looking to relocate that are just looking for a few months here and there until they decide what they're doing. They have some reason that they're here for 30 days, maybe 6 months, but for a shorter amount of time, but not a short-term rental where it's turning over every couple of days. So I do like this because I do think people come to Vancouver. There are some traveling nurses. There's also some people's homes are damaged for some reason, or flood or fire or something. They might need a semi-permanent place to stay. So I am interested in medium-term rentals in Vancouver. And I do think there's a demand. I haven't looked into it enough to really claim to be an expert, but I'm seeing the rental prices being, maybe about 500 to 1,000 more than long-term rental prices for these medium-term rentals. You do have to furnish them. And so similar to short-term rentals, there is an expense of like getting them furnished nicely, having all the amenities there, and really setting yourself apart from the competition, because that is part of it too. It's still kind of a hospitality, but the turnover is less. And I really like that, because it wouldn't be so hard to turn over after a month. You could come in and clean it yourself and replace the soap and the towels and straighten up and everything. So I do like this option, because I do think it could raise the amount of rent you're able to get. Again, if it's sitting though, like if it sits for a month or it's just not being rented for whatever reason, that's a consideration. That vacancy is eating into your profit margin. So I like it better than short term, but it's still a little bit risky and something I'm looking into, but not something I've done yet. So we got short-term and medium-term rentals. Next on my list is just going to be your straight-up long-term rental. And this is a tried and true method. So you get somebody on a year lease, and then maybe or month to month, and they're staying there and they're paying you rent every month. Ideally, it's what you think of when you think of a rental property, like a long-term rental. The thing with long-term rental properties, it's hard to cash flow with them in Vancouver unless you're putting a large amount down. And so, and even then, if you're putting, a lot of lenders require 25% down on an investment property. It's quite a big chunk of cash that you're not going to be able to get back very easily. So a lot of times a consideration is you're going to put in this capital and you're not going to get it back immediately. And so I like to put in the least amount of capital possible and then leverage the rest via a loan. That is hard to do with rental properties because if you're doing a straight buy on a rental, it's usually 25%. Unless you're doing some kind of seller finance deal, and that's kind of hard to come by. It's not impossible. I haven't done it yet, but I've definitely reached out to several listings I've seen, and I've just asked the listing agent, like, is the seller willing to do seller financing? And a lot of times you get a no answer, but it's always something to ask. If you're an investor looking to pick up a home, like, you might be able to put less down and negotiate an interest rate that is lower than what's being offered. It's just sort of the holy grail of investing, is finding that seller financing. And I actually have ran into it on a duplex and I passed on it, but I am kind of like kicking myself a little bit because it was a seller finance deal at a very reasonable rate. They just wanted more money than I was willing to sink into it because I knew I wasn't going to get that back. And I had some other options. I do think about that from time to time, like, wow, I had this seller finance deal and I didn't take advantage of it. So they do come along, but with long-term rentals, even with that 25% down, you're lucky to break even when you account for the principal, interest, taxes, and insurance. It's really hard to make long-term rentals cash flow just buying standard homes at the 25%. Not saying it's impossible. Break even's definitely possible depending on the terms. And again, if you put 50% down, yeah, you can cash flow on it, but then it requires quite a bit of capital. And so a lot of people don't have that capital, or a lot of investors I know, including myself, don't want to throw in a bunch of capital that they're not going to see back because then it just sits there. And so long-term rentals are great, and they were better a few years ago when interest rates were lower. So a tried and true classic, but just be aware that you might not cash flow. So you're going to be looking for more appreciation and rental appreciation and equity appreciation. Next up, I have fix and flips. Now, fix and flips are definitely sort of what's making money right now because you're able to get all your capital back and more. Obviously, you're doing the math on that, but because you're not trying to refinance or you're just selling, you're able to get all your capital back. And the idea is you make money on it, so you get more on your capital. So you're buying a home using typically a hard money loan, sort of alternate bank route, if you will. The interest rates are higher. There's, certain financial requirements that you have to fulfill. These are sort of like companies that they're not exactly banks. They're designed to loan money out for these kind of projects, and they make money on the interest. And then, if you default, then they take the property. And so you're still financing it, and you're still required to put some down. If you have more experience, you could do zero down fix and flips. But if you're not an experienced investor, expect to put down anywhere from 10 to 20%. And then you're going to be paying a higher interest rate during the time that your project is going on. So while you're doing the renovations, you're going to be paying interest on that. You're going to be paying a higher loan fee. So the fees can be pretty high using hard money to do a fix and flip. And you have to really have a lot of experience being able to estimate repair costs, having the ability to bring in vendors, that are going to cost effectively be able to rehab your property so you can make money, because these flips they're pretty risky and you could easily lose money on them if you don't know what you're doing. There's a learning curve. And so while this is working for people right now, there's a pretty high level of risk to it, especially when we have these kind of dips in the market. So I've seen plenty of like abandoned flips or flips where it's halfway done because they ran out of money and they just were like, we need to get back something. And so we're going to put it on the market, which is really unfortunate. But it is what's making money right now for more experienced investors. There is a strategy where you kind of do the same thing. You can use hard money to buy a property. It's called the BRRRR method. It's buy, renovate, refinance, and repeat. And so that's basically where you're buying a distressed property, repairing it, putting somebody in it. There's a seasoning period of usually 12 months, and then you're able to refinance out. So that gets your money back and you're able to keep the property. Right now, these are really hard to make the math work on. And so you're not seeing them as much. You saw them a lot more when the interest rates were lower. So I don't see these very much. Again, if you're doing them, I want to hear about it. Let me know. Let me know in the comments. Come on the show. I want to hear about your experience. And I think other people would too. But I'm seeing more of the fix and flips right now because you're able to get all of your money back. Where in that BRRRR, you have to keep some money in the deal. And hopefully you get that money back so you can reuse that money, but you're not really making more money on top of it. You're getting a property that you own, which is great. And I would choose that over a fix and flip because with the fix and flips, you got to pay taxes. You're in a business on that too. Like you're working really hard. If you're involved in the flip at all, you're managing it. There's all the risk. So it sounds sexy and there's people that do it well and people that make a lot of money. You're paying short-term capital gains and whatever else taxes. So you're losing sort of that tax advantage of owning real estate and it's a job. So then you got to find the next flip and you're doing that. So ideally you'd be doing the fix and flip and then taking some of that profit and putting it into a buy and hold rental property. But yeah, you're paying a lot in taxes and you're taking a lot of risk with the fix and flips, but it is working. Next on my list, and these are the top real estate investment methods I think are working right now and that I have done myself and have recommended to people who either usually these people are of an investment mindset. So they are either first-time home buyers or people looking to buy another home. But the method that I think is the best right now is the live-in flip. So this is where... and also a house hack. So very kind of similar, but a little bit different. So I'll actually bring in the house hack first. And the house hack is typically buying a duplex or a fourplex, and you are living in one of the units and renting the other unit out. And that sort of offsets the amount of mortgage you pay every month. And these can work very well. A lot of times you still have to have a pretty sizable down payment. The down payment requirements have gone down, but some lenders will still, it depends on the lender. Some will count the potential rent towards your qualification and others maybe less so. But the requirements for down payments have gotten less over the last year or two. And so it's really a great option for someone who might be a first-time home buyer. They're looking to just get into an investment property and, they're okay with living in one unit and renting out the others. I mean, you can do this with a single-family home too, but you typically tend to see it more with like a duplex or a home with an ADU or something like that. But it's a great idea because all that money that you're saving on the mortgage, ideally you can, you're saving that, you can make that money work for you. And sometime in the future, you can buy another property to either rent or live in and then keep that duplex that you purchased. And then that kind of builds your rental portfolio over time. So I think that's a great option because you get primary residence interest rates, which are lower than the investor real estate rates typically. So you get access to cheaper money. And then you get reduced mortgage payments because, again, you have that person paying it for you, your renter. I think that's a great option. I would be looking to do that if I was younger. I've thought of doing it, even dragging my family into it. They're less enthused about living in a duplex right now, but it is an option. So I do like house hacking. And related to house hacking, and I think this is a really great idea, is the live-in flip. So this is where you buy a home that has some cosmetic upgrades that you can make. So basically like a granny gold, granny special, orange shag carpet, pink countertops, stuff like that, where it's just a matter of ripping that stuff out, replacing it with new flooring, redoing the bathroom, making those improvements to force equity into it. And then you could either, ideally you could possibly refinance to get your money back or to get better terms. Or again, if you're saving, you could use it to buy another rental property, or you can sell it and then take that money and buy another live-in flip, and then you get that profit tax-free because it was your primary residence. And so I think it's just being a little more strategic about what home you buy and looking at the investment potential and forcing that equity. But the great thing about live and flip is that you have a place to live. It's not your forever home. It's not your dream home because it's got, stinky carpet. But the idea is you're getting the lower interest rate because it's your primary. You're able to move in. You can flip. You can do those renovations over time. You can take advantage of more favorable interest rates in the future, hopefully. And then when you do sell, you can take those gains tax-free because it's your primary residence. So that technique is what I think is really good for people because, and if you're able to, you can hold that property as well. So I think that's what's working right now. Again, very individual. People can make anything work, but deciding what your end goal is and deciding what your strengths are and the amount of risk you want to take is super important. So I highly recommend that. I hope that today's show has convinced you that Vancouver is a fantastic place to invest and given you a little overview of some investment strategies that you can use in your real estate investing journey. If you're interested in investment properties in Vancouver, drop a comment or email me at doug@dougvarenas.com, and let's just get a conversation started about how I can help you find that great investment property. Also, if you want to if you're an investor and you'd like to partner with me on some investments potentially, also drop a comment or email me, doug@dougvarenas.com. Hope this has been helpful. Please like and subscribe if it has been, and I'll see you next time. Take care, everybody.